Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. It was a report day Friday, so how did the markets react? We know there was a lot of negativity going on, but you got to add to the fact that it's end of month, end of quarter, and there's concerns about when and if the government will shut down over the weekend. Now you can add to it, we've got harvest underway, and we're going to take a look at that and a whole lot more on this week's episode.
Imagine a future fueled by soy-based possibilities. A future where creativity and productivity live together under one roof. A future that takes you from point A to point B to point Z, all while ensuring brighter tomorrows for our next generation. A soy-based future? It's already here.
And welcome back once again. You can see I've got the guys from Tredas joining us today. PJ Conradt and John Pfanner are joining us to take a look at what's been happening in these market trades. And gentlemen, a USDA report that came out on Friday, a lot of negative feel on the markets. What are your thoughts?
Well, I guess I'll start. I mean, the corn was a little bit, the numbers were a little bit positive. They actually lowered the ending stocks a little bit. However, since the report came out at 11 to now, which it's currently, as we're talking, it's 1:13, so the market hasn't closed. Corn's off 11, December off 10 on the March, and even next December's off 7. But, I don't know. I'm a little surprised at how we're finishing the day there. Soybean stocks were up, I think about 25 million, but still we're at somewhat tight levels. So I don't know. It kind of feels like a little bit of overreaction. But like you said, month end, quarter end, this report definitely, or not definitely, but usually creates some volatility. However, I did see where this report was one of the first time, and Karen Braun reported it, so it's probably check her tweet for accuracy, for my accuracy, what I'm going to say. But I want to say this is the first time in at least like a decade that all the numbers have come within the range of what the USDA was saying that they could come in at. So, but yeah, and then wheat. The Chicago wheat down 37 here, not looking good, even with the Russians not agreeing with the Ukraine trade corridor and everything, and with the whole reasons that we think that wheat should be higher. It doesn't matter apparently, because the world has found a way to feed itself without it. So
we're going to have to come back around to that here in just a second, John. But PJ, I wanted your initial reactions to the USDA report.
Initial reaction, you had a little bit to beans and corn's flat. It seems like a big nothing report, I guess. It's kind of given us a bullish catalyst the last 3 years. So you're always hoping for something to push the market higher. And obviously today was not it, as we go into the close and being down hard. I think a lot of it, like you said, end of month, end of quarter, maybe get some positioning going on. If you look, usually this is when we do score lows, either side of October 1st, and we're knocking on the door of that. So a lot of seasonality would say we would rally back throughout the month of October. And if you're a conspiracy theorist, I guess would be one way to put it, you think we're going to rally the price so we don't get paid on crop insurance, on federal crop insurance. But is what it is. I mean, we'll take a rally at 5, hopefully back north of 5. And there's still a gap in the chart at 520 to 30 on the D's corn and soybeans. The thing you got to love about soybeans is they have the ability to rally $1 for no good reason, and ability to take $1 off for really no good reason too. And so, like you said, Susan, harvest is really cranking up in the Midwest. I think we're probably going to be done with beans by and large right over the weekend, and really corn harvest will take off. So government shut down, what the USDA report is supposed to be October 12th, I think, give or take. Maybe we don't get that report, which might be a godsend, really. They just seems like it just reaffirms that there is a big crop, because you got 95 million acres. I think that's something you got to keep in your mind. We can talk about the end cap of the 22 crop we had today and what that looks like. But ultimately, as we move ahead, we're always going to have a hard time breaking out in corn, because you can take a lot of yield off. So we need beans or wheat to do the heavy lifting, and today did not help the wheat market to do the heavy lifting, and also probably add a little bit to the bean carryout, albeit still very tight. And I don't think yields are getting anybody excited, but the export market, and John can speak more on that, isn't too excited about soybeans either.
Yeah, exactly. That's the export market has been extremely dismal, basically on every crop. I mean, So the fact that these prices are hanging in here where they are, and I know I'm saying hanging in here, and probably a lot of farmers that maybe feel a little undersold at this point, or maybe regardless of how they feel they're sold or not, they probably don't agree with that statement. But when you look at where we were 1 year ago and the fact that stocks on corn haven't really changed on the price, but yet we're down, what, $2 on corn roughly? I mean, I don't know. I'm kind of taking a stab there, but and definitely a couple bucks on the beans. It's surprising they're hanging in there. But again, exports, very dismal. The river situation, low waters, causing expensive freight. It's going to be tough to dig out of this, dig out of this hole that we're in as far as exports go.
Well, I think, and not to cut you off, Susan, but I do think one thing to hit on is the commercial does not own a lot of corn today. If you look at the commitment of traders, they don't own a lot of corn. And in this report, what ending stocks on corn are only up 1%. I believe it was 19% is up in the farmer's hands.
Yep.
What that tells you is by and large, the farmer's undersold, and he might hold some old crop as well. And they've seen a $3 swing in the old crop market, $1.50 in the new. And there's a lot of guys sitting around saying, now what are we going to do? And how do we make this bad situation a good one? And there's no perfect plan, but you got to have something to say, I'm going to sell a rally, or you're going to watch this thing go up and down and potentially down lower and not do a darn thing about it.
Well, that's what I wanted to ask you guys, is the fact that, these combines are rolling. Is there the temptation just to say, I'm going to put it in the bin and I'm going to wait and see if all things get better in the world, if they can afford to do that?
Well, I think at this point, it's a great plan. I mean, it doesn't make a lot of sense to go puke it in at 12-month lows either. I think you got to be responsible enough to say, let's put this in the bin, but what's your game plan of how I'm going to price this? Basis probably has we got a huge disconnect of rail and ethanol and crush margins. So who's going to lead that boat? And the farmer's going to be a stubborn seller probably until JFM, most likely.
Yeah, I would definitely say that, having some sort of protection plan to the downside, but leaving yourself as much upside flexibility as possible. And that's not just the broker and me talking, that's legit. Like I'm with Phil, we're at 12-month lows on corn and beans. We're at 3-year lows on wheat, which I know is not wheat harvest, but I was going to throw that in there because it's important. Price is getting back to, or it is heading the direction it needs to go, unfortunately, to ramp exports back up. But to be honest, I don't know what that flat price is that actually spurs it, especially with the river being lower. That forces everything over to the PNW, and that market's already overloaded. And so it's going to be tough. But there again, we could still see to relieve your anxiety, do something to protect the downside, but leave plenty of upside flexibility, and however that is, and don't necessarily just put it on DP because it's going to be, it's only a quarter to the end of the year, because you might be, pay a quarter and it's down another 25 cents too, before we finally get some catalyst to bring the market back up.
And some might wonder too, is there the opportunity, can the rail even handle it if we're not going to be pushing it down the river?
That's exactly, the logistics at the PNW right now is going to be the tough part, I think, right? Phil, then there's some are internal conversations. It's pretty jammed up out there.
Yeah, jammed up. And you also got, it's interesting, 3 weeks ago, everyone thought harvest would be full till, beans be done with. And there's a lot of bean trains, just the way the things have hit. There's bean trains sitting on track here waiting for harvest to fulfill their needs. And I was just talking to a guy today at a local co-op, and he made the point too. He goes, there's zero reason why I should be buying the basis I am, because I can't logistically move that much in the truck market. But and right now what I'm buying is what I can sell. So it makes 0 sense, but the carry is there right now in the bean market. And another bean buyer told me, because China's going to have to come to the market here at some point. And when they do, it's going to be at big chunks at a time. And so his theory is we could see November really take off in the next 30 days, close that carry, and provide some export demand. And I think I've said before on other shows, Susan, I do think there's the thought process of you're China. Why not see where this market is if we have 95 million acres before you go in and buy a bunch too?
Well, and John, you were talking at the beginning about everything that's been going on in this wheat complex. And it's interesting how it seems to have a global hold on what we're seeing and the flood of cheap wheat that's coming to market.
Yeah, the news is flooded, to use that term, with everything's about the Ukraine corridor and is it going to be renewed or is it not? That's all we've talked about since they initially did it, right? And now here we are. Not they did not renew it, and it's not helping the wheat price one bit. And so it's just like, where's this coming from? Well, big crops and just lower overall demand, and then the market actually does find, when you have an event like that war, that is kind of like a shock thing. The market does what it needs to do to ration, figure it out, but then it goes, okay, now how do we get all this other grain and these other alternatives and get them in place to make this work? And that's what commodity traders have done since basically there's been commodity traders. And so I think that's what you're seeing is now we've got these alternate routes and we've kind of figured it out. Now again, things will go back to mean, but it's going to, I don't know when that is.
John, I was thinking about this, the whole Poland situation of them not wanting to, Ukraine not wanting to, or being able to move grain through Poland or the EU. How long does it take for that to shake out in the world market? And does it really matter? Does the Ukrainian farmer just take a bigger hit and end up going bankrupt, and then we'll bail them out?
Interesting times, gentlemen, we're in. Appreciate you joining us this week.
Yeah, it was a great time, Susan.
Thank you.
All right. As we always remind you, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Nebraska Soybean Board Weekly Market Roundup on the Rural Radio Network.